Welcome back to another episode of Why the Crypto Market Needs a Nap and a Hug. If you've been watching the crypto markets this week, you know it was less of a market and more of a high-speed roller coaster designed by a clown on 3 espressos. 1 minute, everyone's planning their retirement on a private yacht. The next, they're Googling how to sell a kidney on the dark web. It was a beautiful, terrifying mess of green candles, red candles, and people posting "Wagmai" with tears in their eyes. So what on earth just happened? Don't worry, we're going to break it all down, nice and simple. We'll look at the big moves from Bitcoin, the bizarre phantom price spike of XRP, and the institutional giants who seem to be shopping while everyone else is screaming. It's a story of fear, greed, and computer code doing things nobody fully understands. This week was a masterclass in crypto's personality disorder. On one hand, you have trillion-dollar institutions making calculated moves. On the other, a coin named after a dog making news. It's wild, it's weird, and it's undeniably the future of something. Let's figure out what that something is. Let's start with the king, the big cheese, the one and only Bitcoin. The week started with a party. Bitcoin surged past $87,600. Crypto Twitter was electric rocket emojis everywhere, charts pointing straight to the moon. The bulls were back in town and everyone was ready for the parade. You could almost hear the collective sigh of relief from investors who had been patiently waiting, telling their skeptical relatives, "See? I told you so." It felt like the good times were here to stay, a glorious new chapter in the bull run. But in crypto, the party can end as quickly as it starts. Just as everyone was getting comfortable, the price took a nosedive, dropping all the way down to below $83,000. It happened so fast it left a giant red wick on the charts that looked like a crime scene. The internet, of course, had theories. Price manipulation? Japan's historic stimulus package scared markets? BlackRock clients dumped Bitcoin as price crossed 81,900? Now, if you thought Bitcoin's week was a soap opera, hold my whiskey, because XRP just entered the chat. For one brief, glorious, and utterly insane moment, the price of one XRP token apparently hit $90 on an exchange. Let me say that again. $90. The internet promptly lost its collective mind. Screenshots of this phantom price spread like wildfire. The prophecy is true. It's a glitch, you maniacs. For a few seconds, an entire community of investors thought they had become multimillionaires. Then, poof. The price snapped right back down to its normal level. This glitch became the Rorschach test of the crypto world. A simple technical error? A fat finger trade? A sneak peek into the future? A glimpse of XRP's true value once all systems are in place? The debate raged on, fueling countless YouTube videos and forum threads. It was the perfect crypto mystery, unprovable, tantalizing, and just crazy enough to be believable. Grayscale's Dogecoin and XRP ETFs set to launch. Monday, November 24, 2025, after NYSE approval. MasterCard plus WebBank integrating XRP. Global payments are slowly turning into Ripple's playground. Brad Garlinghouse speaking at Blockchain Week Dubai, December 3, 2025. Expect him to say something bullish and the price to ignore him entirely. Beyond the headline acts, the rest of the crypto ecosystem was buzzing. In the world of memecoins, Shiba Inu had its moment. A massive crypto holder, or whale, casually removed 272 billion Shiba tokens from Coinbase. For the Shiba army, this was a bullish signal. For critics, a terrifying concentration of power. Meanwhile, Capital One joins FedNow. Instant Payments Gang gets another member. Additionally, the big exchanges were building their empires. Coinbase acquired Vector.fun, built on Solana, and rolled out a feature allowing users to take out loans using their Ethereum as collateral. A sophisticated tool, but also incredibly risky, like a mortgage on a house built on a seismic fault line. The slow, steady march of stablecoins also continued. Tether announced it increased its gold reserves to 116 tons, more gold than Finland holds. India revealed plans for a rupee-backed stablecoin, and Visa continued its own push. PayPay in Japan integrates Binance Japan. Also, new billionaires behind the AI data center boom. Because someone has to get rich while the rest of us are Googling how to trade with high blood pressure. This is the plumbing being laid for a new financial system. Finally, the technology for tokenizing real-world assets, like real estate and art, is quietly maturing. Companies are building tools that will one day let you trade a fraction of a skyscraper like a stock. It's the foundational work that could underpin the next wave of innovation. So, after a week that felt like a fever dream, what's the lesson here? What are we supposed to take away? Chaos, glitches, and institutional mind games. First and foremost, breathe. This kind of volatility is stomach-churning, but normal for crypto. It's a feature, not a bug. The market is young. It's incredibly emotional, driven by narratives and by fundamentals. Panicked selling from fear, explosive buying from hype. This is the personality of a market finding its footing. The key is to zoom out. Up close, you can't see the forest for the trees. You just see the terrifying red candle that wiped out your morning's gains. Step back, and you see a different picture. Institutions like BlackRock accumulating, payment giants like Visa integrating crypto, payment giants like MasterCard integrating crypto, stablecoin growth moving forward. Tether invests in Parfin for Latin America institutional expansion. World App starts virtual bank accounts for USDC payroll. And real-world asset tokenization being built step by steady step. Real growth is in the layers being built underneath, not daily swings. Lesson: have a plan. The market separates people from their money. Emotion does the work. Long-term investors don't panic sell. Instead, use dollar-cost averaging. Crypto market crash is a generational opportunity, according to Bitwise investment chief Matt Hoogan. Buy small, consistent amounts to lower your average entry. Short-term traders, respect risk. Use tools like stop losses. Trying to ride the wave without a surfboard will drown you. Know your strategy. Stick to it. Crypto is maturing, dramatically and hilariously. It's like a teenager going through puberty. Awkwardness, mood swings, questionable decisions. But growth is happening underneath it all. Laugh at the absurdity. Learn from the volatility. Look for long-term progress. The market lost its mind this week. The future is still being built. This week was a masterclass in volatility, manipulation, macro panic, institutional accumulation, ETF anxiety disorder, XRP delusion, plus hope, plus chaos, Bitcoin emotional breakdowns. But hidden underneath, institutions are buying. Tokenization is accelerating. Stablecoin wars are heating up. Regulation is shifting. ETFs are growing despite outflows. Adoption is happening globally. Handle the roller coaster. Enjoy the ride or wait calmly for it to end. Peace.